I lost thousands of dollars because of these investing mistakes, and I'm here to make sure you don't do the same. Investing is critical for financial growth, but one wrong move can cost you dearly. Let's go over the top mistakes and how to fix them. The first mistake I made was trying to time the market. I thought I could predict when stocks would rise or fall, and I kept moving my money in and out of the market. It seemed like a smart strategy at the time, but it backfired because timing the market is incredibly difficult, even for seasoned investors. Every time I thought I had it figured out, the market would prove me wrong, and I ended up missing out on significant gains. Instead of staying invested and letting my money grow over time, I learned the hard way that time in the market beats timing the market. This experience taught me the importance of patience and long-term investing. Another costly mistake was ignoring diversification. I put all my money into a single stock that I believed would skyrocket, but when that stock crashed, so did my savings. Diversification is like having a safety net. It spreads your risk across different investments, ensuring that if one performs poorly, others can balance it out. At the time, I didn't understand this principle, and it cost me dearly. Now, I always make sure to diversify my portfolio across different sectors, asset classes, and even geographies. This simple yet powerful strategy has become a cornerstone of my investment approach, helping me protect my wealth and reduce risk. Investing without proper research was my third big mistake. I jumped into investments based on tips from friends or headlines I read online. I didn't take the time to understand the companies, their financials, or the market conditions. As a result, I ended up investing in companies that were overvalued or had poor fundamentals. Research is the backbone of successful investing. Before putting your money into anything, take the time to understand what you're investing in. Look at the company's financial statements, growth potential, and competitive advantage. It might seem tedious, but it's worth it. Chasing high returns without considering the risks was another mistake that wiped out my savings. I was lured by the promise of quick high returns, and I ignored the risk involved. Whether it was penny stocks, cryptocurrencies, or speculative investments, I thought I could get rich overnight. But high returns often come with high risk, and I learned this the hard way. Many of these investments turned out to be scams or simply too volatile. Now I focus on balanced investments that offer steady returns over time. It's not as exciting, but it's much safer. Panic selling during market downturns was perhaps my most expensive mistake. When the market started to drop, I panicked and sold my investments at a loss. I was afraid of losing even more money, but by selling, I locked in those losses. What I didn't realize is that market downturns are a normal part of investing. Historically, the market has always recovered, and those who stay invested usually come out ahead. Instead of panicking, I now see downturns as opportunities to buy quality investments at a discount. It's a mindset shift that has saved me a lot of money. Looking back, I realized that these mistakes were all rooted in a lack of knowledge and emotional decision-making. I let fear and greed drive my actions, and it cost me thousands of dollars. But the good news is, you don't have to make the same mistakes. By staying informed, keeping your emotions in check, and following a disciplined approach, you can avoid these pitfalls. Investing is a long-term game, and patience is key. Don't let short-term fluctuations or the fear of missing out dictate your decisions. One of the most important lessons I've learned is the power of compound interest. When you stay invested over time, your money grows exponentially. But when you keep pulling your money out or making impulsive decisions, you disrupt this growth. Compound interest works best when you give it time. Even if the market goes through ups and downs, staying invested allows your money to recover and grow. It's a simple concept, but it's incredibly powerful when applied consistently. Another key takeaway is the importance of having a clear investment strategy. When I started investing, I didn't have a plan. I was just throwing money at whatever seemed promising at the time. But without a strategy, it's easy to get lost and make costly mistakes. Now I have a clear plan that outlines my financial goals, risk tolerance, and investment timeline. This helps me stay focused and avoid impulsive decisions. Whether you're saving for retirement, a house, or your child's education, having a strategy is crucial. It's also important to regularly review and adjust your portfolio. Markets change, and so do your financial goals. What worked for you 5 years ago might not be the best strategy today. I make it a point to review my portfolio at least once a year and make adjustments as needed. This doesn't mean constantly buying and selling, but rather rebalancing to ensure your portfolio aligns with your goals and risk tolerance. It's a simple step that can make a big difference in the long run. Lastly, I have learned the value of seeking professional advice. When I first started investing, I thought I could do it all on my own. But the truth is, investing can be complex, and there's no shame in seeking help. A financial advisor can provide valuable insights, help you create a solid plan, and keep you on track. Even if you prefer to manage your own investments, it's worth consulting with a professional from time to time. They can offer a fresh perspective and help you avoid costly mistakes. Investing is a journey, and it's normal to make mistakes along the way. What's important is that you learn from them and keep moving forward. I've shared my top 5 investing mistakes with you, and I hope they serve as a cautionary tale. By avoiding these pitfalls, you can protect your savings and build a secure financial future. Remember, investing is not about getting rich quick. It's about growing your wealth steadily over time. Stay patient, stay informed, and stay disciplined. If you're serious about investing, check out the free guide in the description for beginner-friendly strategies.